Currency trading using support and resistance is one of the most common and accurate ways to trade in any currency market. That includes the foreign exchange market and the cryptocurrency market. Trying to trade profitably in these markets without understanding support and resistance is nearly impossible. It would be like trying to jump out of a plane without a parachute. It would not end well, to say the least. So that is why in this video, I'm going to be showing you how you can actually trade all different types of currencies based around support and resistance levels. At the beginning, just in case you're brand new, we'll go over what support and resistance are. And then obviously we're gonna dive into how to spot these levels properly so you can find the most accurate levels to trade around in your own trading. After that, we're gonna dive into the preparation you need to take once you've spotted your level. Now you have to actually wait for the price to get there. And then we're gonna talk about the rules around how to enter into possible trades while the market's in these zones. You don't just buy at support and sell at resistance for no reason. You need an actual strategy all put together nice and tidy and organized in order to trade around support and resistance levels properly. I will also be going through a live trade I had on the dollar yen with you guys and breaking that trade down using exactly what you're going to learn throughout this video. So if that sounds good, sounds like something you're interested in, make sure to go ahead and click that like button. Make sure to subscribe because we come out with content like this every week. I would hate for you to miss it. If you're already subscribed, you know what's coming. I'll see you on the other side of the intro and disclaimer. Welcome back, and firstly, let's talk about what support and resistance levels are. Currency traders use support and resistance levels to point out accurate areas to trade from that give them the highest probability to make profit on a specific trade. We use these zones and areas of support and resistance in the same way that a professional baseball player waits for the perfect pitch. In a game, a professional baseball player is not just swinging at every pitch that comes across the mound. They are waiting on that perfect pitch that gives them the highest probability of hitting a home run. In the same way, as traders, we are not just placing trades all the time randomly. We are waiting for these areas of support and resistance to give us the highest likelihood to win a trade and make profit on that specific trade. Now that you know what support and resistance levels are and how professional traders use them, let's move on and talk about how we can spot them on a chart. How do you spot these accurate levels to trade from that give us a high probability of winning a trade? But before we move on, I just created and released an absolutely free university-style Forex beginner course. This course is organized and laid out step by step of each step that you need to take to go from a complete beginner to someone who knows the strategy and knows how to create their own trading plan. Along with that, you'll understand trading psychology and risk management throughout the course. It's about 5 hours of content and it's absolutely free at the moment. So if you'd like access to that, all you gotta do is click the link in the description or go to www.ttcforexcourse.com. That'll be somewhere on the screen as well. But now let's move on to how to find these levels in real markets. The way I point out really accurate levels of support and resistance is through a process I call OTZ. This stands for optimal trading zones. And anytime you're creating a trading strategy or a trading methodology, it is extremely important that you have rules for every part of that methodology, for every part of that strategy. In the same way, we need rules for support and resistance. Otherwise, we're gonna think of a ton of different scenarios that could be support or could be resistance. We don't want that kind of subjectivity. We wanna be set in stone and definite about how we define support and resistance levels we're going to trade around. So with optimal trading zones, with this OTZ methodology, I have a few rules that I always follow. And they go a little bit like this. I'm just gonna draw out a little bit of price here to give you guys a brief example, and then I'm gonna talk you through what I mean. So right now on price, what has just happened? If price is right here, if price is right there, then we've just seen the break of a support level. And when identifying an optimal trading zone, I look for two things. One is recency, I'm gonna label that R, and the other is frequency. Recency being, is it the next level or the last level that was tested? Frequency being, how many times was that level tested? So in the case of this previous support level, we can see that it's definitely recent. It was the last level that was broken. And we can also look left if we kind of draw our line out here and see that it was also tested, and it's going to be zones, not lines, guys, but it was also tested as resistance. That qualifies as recency and frequency. Therefore, this would be an optimal trading zone. Now, looking to the downside, what is the next level? If we're going to continue pushing down, what's the next level we are going to hit? And let me do this to make it easier as well. Pretend this is another little support level right here. If we're pushing down right here, I always want to think to myself, what's the next level of support I'm going to hit for buy trades? So right now, with this being our OTZ that's above price itself, we would be waiting for the market to come up to that area, and that would be our area of possible support, our accurate area, or our OTZ. Let's say the market does that and then starts pushing down. What would be the valid OTZ for support? Would it be this level? If you said yes, then you were mistaken, and this is why. At this point, after the break of this support level, we are in more of a downtrend than an uptrend. While we're in a downtrend, we know that price is likely to make new lower lows compared to its previous low. So if that's the case, we don't want to be trying to trade from this level here. What we want to do is wait for the market to break that level, and then we want to look left and see what the next level of structure the market's going to hit will be. And we can prepare for all of this while the market's right here. So what we do is, again, we don't look at the level that was just used as support, because in a downtrend, that level is very likely to be broken below. We look at the level next to it, or the level below it, that price will inevitably hit if it continues lower. That level is right here. And when I say recency, this is something that people oftentimes get confused about. I don't care how long it's been. This could be years of data. This could be like 2 years. What I'm waiting to see is what's the level price is going to hit if it continues lower. We're going to do some examples on the charts. If you're confused right now, don't worry, you won't be by the end of the video. But I'm waiting to see that, and if that takes 2 years of data to find, that's totally fine. I just want to make sure that I can see a level back in the past that is the last place price was supported by compared to where price is now. I count that as frequency, and in this case we also, I count that as recency, and in this case we also had frequency with another level of support right here. Now I know drawing that out was probably confusing as hell, but again, that was just a brief overview. Now we're going to take a look at a real example on a chart, and it's going to clear things up dramatically. So let's do that right now. After seeing that example, you may even be looking at this chart of the Canada Swiss going, holy shit, I can already see what Stephen was saying. Hopefully you can. At this point, what has price done? Price has broken below a previous support level. If that's the case, and price is exactly where it is right now, what's your next step? This is kind of going into the preparation stage of trading. Your next step is to find the levels in the market that have been used as support and resistance in the past. Well, we know that if we just broke a support level, this is the most recent recency bias break, and now we have to see if that was a frequently broken or a frequently tested level of structure. If we look left, you can see that it absolutely was tested here as support and tested here as support, with this being the most recent level broken and being a level that has been tested multiple times. Then this level absolutely counts as an OTZ, or optimal trading zone. Now, when preparing, again, going into the preparation stage of trading, it's not only important that we prepare for what the market will do next if it continues higher. We also need to prepare for what happens if we move lower. If we move lower, is this a level of support? No. Why? Because what we've just done is broken below a level of support. This indicates a possible start of a downtrend, so I'm not going to be waiting for the market to come back down here and then trying to trade off of that. That makes no sense. If we're in a downtrend, the market's likely to break below the low. So knowing that information, what we have to do from price here is not count this low, but look right below it and look left to find our next low of price. That's going to be the most recent level, what we call recency, which is just if price heads lower, what's the next level it will inevitably hit if it continues pushing down. For now, it's this level right here. And then we ask ourselves the second question, is that a level tested recently? Yes, it was tested, frequently. So now we have frequency tested as resistance and support, and it is the recency, as in the level price will inevitably hit if it continues lower. So with those two things coming together, we have our two optimal trading zones on the Canada Swiss. We have a level of resistance and a level of support we're paying attention to for accurate trading opportunities using the rules of the OTZ system. So let's click play a couple of times here and see what happens out of the Canada Swiss. As you can tell, we're actually currently in a trade here on the Canada Swiss based on this. The market came up into our zone. We got an entry reason on a smaller time frame, and we've pushed down a little over halfway to our targets at this point. So now that you have a little bit of an idea, again, we're going to be going over a ton of examples of this throughout this video because I want to be sure and be as detailed as possible to make sure that you completely understand this system by the end of this video. So with that said, what I want to do next is dive into a live trade that I had on the dollar yen using the same exact process and walk you through it one more time, along with a bunch of other examples we'll have after that live trade to help you to better understand how I use it in my own personal trading. So let's dive over to the dollar yen chart and I'll see you guys there. Okay guys, so let's break down the dollar yen using very simple structure, support, and resistance analysis in order to try to make some money off this pair tonight, like right now. So let's see what we're looking at. If I zoom in on the chart, what can you see here on the dollar yen? Well, we can see that this currency pair has just now done what? It's just now broken below the most recent level of support. At this point, what I'm interested in seeing after that break of the previous support level, as we all know, previous support tends to turn into what? Resistance most of the time. So with that being the case, now that we've seen that break and we have a pullback into that previous support, I want to add a little bit more confluence. I want to ask myself, if I put a horizontal line here at that support level, has it been respected as support and resistance multiple times in the past? The answer here is obviously yes. We have an area that was tested as support, then resistance and resistance. So therefore I have an area that's been tested multiple times. What am I going to do now? Am I just going to place a trade? Well, absolutely not. I want to see a reason to actually place a trade. Right now, just because we're in this zone, that doesn't mean the market's going down. I want to see some confirmation that sellers are starting to take control. So I'm going to drop down to a lower time frame and ask myself the same question. Well, yeah, here we can see that we have a doji candle showing me slowing down of the buying pressure we see from the previous candle. If you'll look with me, if I zoom in here, the previous candle we had, this big green one, was showing a lot of buying pressure. Well, that immediately stopped with this doji candle. And if I wait 2 hours and 38 minutes and see that this candle, the red one, closes below the previous candle, that's a good indication of selling pressure. Now, does that mean 100% that this market's going to dive down? Absolutely not. No trading strategy, no trading methodology is ever going to be 100% accurate. And even if this candle did close here, we could still see the market rally to the upside. But what I can do at this point is go down one more time frame. At least for my own trading methodology, I allow myself to do this. So I can go down one more time frame now, and this looks like a great place for me personally to enter. And I'm going to explain this in depth as we move forward. I just want to do a little bit of the analysis and a brief overview of why I'm interested in this trade for you right now as I'm about to enter it. But here you can see we've come into this zone of structure support that should turn into resistance that acted as support and resistance looking left. And we've gotten a nice reverse hammer followed by a close below candle. This is a lot of selling confirmation, even though it is on a lower time frame here. Being on the 1 hour time frame, that is still plenty of selling pressure for me to decide to go ahead and place this trade. And also what we can see here is that we have a slowing down of price. We have this big green candle, little pullback, more big green candles, and then here we just have price slowing down a bit. Now, a lot of this is due to one of these candles is the 5 p.m. candle, and during the Asian session, price does slow down. But during the Asian session, to see a big red candle like this means a lot of sellers stepped in. Now, that wasn't necessarily part of the analysis, just something I thought I would bring up here doing the analysis with you. So right now, what we're going to do is put a stop loss just above my zone in case price does rally a bit, because what I don't want to see is price come up to these highs and then shoot lower and maybe stopped out. For me, I like looking for at least a 1.4 to 1 reward to risk ratio. I want to make sure that doesn't happen before my next level of major support right over here. So with this being the case, I have a perfect trade set up, again, at least for the way I trade. So I'm gonna go ahead and actually take a position out on this trade live here with you. So let's go ahead and right click, go to create limit order. It's actually gonna be a market order to sell. I'm gonna have a 2% risk and I am ready to go. All right, pressing the button and we are in on this trade with about a 1.4 to 1 reward to risk ratio. And that is a very brief version of the analysis. What we're gonna do now is look at all the little details that went into this dollar-yen trade. Now let's check out how that dollar-yen trade ended up actually playing out. If I hit play here on the market replay, you can see that it ended up being an absolutely pain-free trade, pushing down to hit my targets no problem. Just as a disclaimer, this does not happen every time. It's not like I win every trade. This strategy and no other strategy you ever find is going to be 100% accurate. But trading in this way gives what we call an edge or an advantage over a large sample size. And that's how we make money as professional traders. But let's go ahead and dive out to the daily chart and kind of discuss the full optimal trading zone or OTZ system that was used on this particular trade. I'm going to do so by opening up market replay and moving back to this candle here. So at this point right now, where price is on our green candle, what do you notice? If you're looking with me and you're looking at the markets the same way I do, then you notice that this market just broke below a support level. When that happens, then that creates recency. What I mean by that is this is the most recent level of support or resistance. If we were going up, it would be the opposite. But in this case, this is the most recent level of structure support that was broken. As soon as that happens, as soon as I see a break of a level like this, I want to look for frequency. I have recency. This is the most recent level broken. Well, let's look back in the past at this point and see, was this level tested multiple times as resistance or support? The answer to that question in this case is it absolutely was. So with that being the case, the preparation side of trading is I already know at this point what I'm going to do. I didn't jump into the market on 7/12 on July 12th and just go, oh, I got to find a trade. I got to find a trade. Impatience is the downfall of plenty of traders. Trust me. Patience is how you create a professional trading career. Again, I didn't jump in on July 12th and go, I got to find a trade. I jumped in and said, okay, let me prepare for the situation that might happen, which is the dollar yen continues higher. If it does, I know we just broke a level of structure. That's a level I want to pay attention to as my perfect pitch. If I'm trying to swing for a home run as a baseball player, this is my accurate level of support or resistance. Resistance in this case, this is my OTZ, my optimal trading zone. I'm going to sit on my hand, not literally sit on my hands, but I am not going to place a trade on the dollar yen unless we get to that level. I'm not looking for any other trades when trading the OTZ system. So what I did is drop down to a smaller time frame. That was the 1 hour chart. And I waited for the market to show me some selling pressure. As we pushed up into this zone, we eventually got that selling pressure. Now, this looks like selling pressure, correct? It's a big reverse hammer candle followed by a close below red candle. That should be selling pressure in anybody's eyes. So since most traders know that, excuse me, since most traders know that, why is everyone not profitable? Well, remember that thing we just talked about called patience? Most traders will see a candle like this, and no matter where they are in the market, in price, on the chart, they will just go short. They will sell that market, expecting the market to go lower. I'm not doing that. I'm waiting on that perfect pitch. I'm not trading this as a candlestick pattern unless it happens inside of what I consider an optimal trading zone. That's the biggest difference between a new trader or even someone that's been struggling for a long time and hasn't figured trading out yet, is the fact that they are placing trades in random areas and not following the rule of waiting for a market to be in some kind of support or resistance area, in our case, the optimal trading zone. So considering not just that we had selling pressure, not just that we had a level of major support broken, but considering that on a daily chart, this level was the level that was most recently broken and a level tested multiple times. And considering that on a 1 hour chart, we have now pushed into this level and saw that sellers were trying to take control with a reverse hammer and then that close below red candle. That's the reason that this trade has an advantage. There's no way to know whether or not it was going to work out. I didn't know for sure what was going to happen, but the reason we have an advantage is because we put together all of these factors. We organize this into a strategy with rules for our structure level, the OTZ rules, and rules for our entry seeing selling pressure like this. And because of that, we ended up being rewarded by the market going in the direction we expected, and the market ended up hitting our targets here on the dollar yen trade. So hopefully that walkthrough gave you a better idea of how I use this in my own personal trading. What we're going to do now is take a look at a few other examples to be sure that you have this down. Again, I want to be as detailed as I possibly can because by the end of this video, I want you to understand this system like the back of your hand. So in order to do that, what we're going to do first is take a look at a video from our VIP mentorship group called the EAP. And in this EAP training program, I release a video every Monday showing traders the areas that I'm paying attention to that I find by using this OTZ system. So let's take a look at that first clip and then we'll come back, take a look at the chart and dissect how I found that area or that OTZ on that specific chart. I think the first one's going to be the Aussie dollar. So I'll see you guys there. Hey traders, hope you guys had a great weekend and welcome to another best setups of the week video. This week, we're gonna get started with the Aussie dollar. Here on this pair, you can see that price has just broken below a major level of support. This is a level that was tested multiple times as support and resistance looking left, and it is a recent level that if price pushes up, it will be the next level price will hit before a possible push lower. This looking a lot like a reversal pattern to me as we put in a head and shoulders here and we've now broken through that neckline. With all of that coming together, it does qualify this level as an OTZ or optimal trading zone, and this area is between 0.7624 and 0.7569. If price does in fact climb a little bit higher and get into this zone, I'll be looking for the aggressive entry. So as you can see on the chart, this is where the Aussie dollar was at the time of making that video for EAP members. And if I click play, you'll see that the market came to this zone and then pushed down exactly as we expected. Again, nothing's 100%. It doesn't always work out like this, but this is how we give ourselves an advantage is by spotting out levels like this, these OTZs. Now, this is a video that I do for EAP members each and every Monday. I go through all the currency pairs that I'm looking at and I also point out the OTZs on each of those currency pairs so traders have an idea of the areas I'm looking to trade in for the week ahead. If that's something you're interested in getting every week, along with a full training course and a bunch of details I'm not going to bore you with here, then we do have some space available in the EAP training program. You can find that at the top of the description or type in www.eaptrainingprogram.com. If not, that's totally fine too. I love giving out free content. So let's break down the Aussie dollar and talk about why this zone was an optimal trading zone or an OTZ. So what did we have that happened? If you'll notice, almost every time I point out an OTZ, I wait for the market to break through a recent structure level. Now, what I want to clarify is when you think of most recent structure level, which level are you thinking of? You're probably thinking of this one. The reason being, because this was the most recent level of structure time-wise, if we're looking back. But time-wise is not what I mean when I say recent. What I mean is the level that the market or price broke last, which would be this level here when we were on the chart in that video. We were right here. So the most recent level for me, what I mean by that is the last level that was broken by price, which is right here. Hopefully that cleared up any confusion about that. But on the Aussie dollar, at this point, we looked left and we found that we do have a recent level that was just broken. We asked ourselves the second question, which is recency. And yes, we have a level that's been tested multiple times as support and resistance. And again, patience. At this point is when we prepare, not when we come to the market and just try to place a trade. We are preparing for when the market gets to this area. So at this point, I knew if the price of the Aussie dollar pushed up to between 0.624 and 0.7624 and 0.7569, I was going to be looking for possible short trades. And if you're wondering what the aggressive entry is, which is what I said right before that video cut off, that is one of the entries I teach in the EAP training program. So with that being the case, now that you know why I was looking at this here on the Aussie dollar as an OTZ, hopefully that is incredibly clear. Let's go ahead and move on now and talk a little bit more about optimal trading zones. But first, let's take a look at one more clip from that best setups of the week video. This one will be on the Euro Aussie. I'll see you there. The Euro Aussie. Here on this pair, we have a level of resistance looking left. This, in fact, is the next level of resistance price will hit if it continues higher. The reason this is an area I'm looking for possible short trades out of is because if we look left, it's the same pair we had last week, so you may remember this from last week, but we do have the next level of resistance. Along with that, though, this was a level tested multiple times looking left. So with those two factors coming together, we have a valid OTZ, optimal trading zone, and if price climbs a little higher and gets into this zone, I'll be looking for the aggressive entry out of it on the 4-hour chart. Here we are on the Euro Aussie chart at the time that I posted that clip, and what you can see and what you just heard is I was looking at this zone as an OTZ for two reasons. The same two reasons, the same two rules I use for OTZ trading all the time. I want to see recency and frequency. In terms of a counter trend area, which is what this is as the market's pushing higher, we're getting closer to a resistance level that would be counter trend. I don't look at this level. Why? Because if we're pushing up and we're breaking into new higher highs, higher low, I don't want to look at this level for possible shorting opportunities. Because if we're breaking into higher highs and higher lows, the likely scenario is that we break into new highs, right? Because we're in a trending market to the upside. So with that being the case, I have to look above this area and to the left, which is where I found this level of structure that had also been tested multiple times. So what we have is frequency back here, and we have recency. This is the next level. Price will hit if it continues higher. That's how I spot these levels. And you'll see what happened in this area. If I click play a few times here, we got right to this area a couple of times and actually hitting it almost by the pip with this candle before we saw a nice drop here on the daily chart that lasted all the way until this very low swing low here. So about a, let's grab the ruler tool, something like 260 pip move. And that 260 pip move is the reason I take trades on smaller time frames whenever this happens. So whenever this happens, I'm not taking my trade on the daily chart, because if I was, I would have to enter after this big red candle. Instead, I'm looking on lower time frames to find selling pressure. That way I can get in on lower time frames with a smaller stop loss and a larger reward to risk so that I can get that larger reward to risk ratio. So with that being the case, that's how I found the OTZ here on the Euro Aussie. What I'm going to do now is play you one more clip from that video, and then I'm going to dive into what I'm looking at for this week, or actually next week coming up. I'm going to go through markets and show you guys the OTZs that I'm actually paying attention to in the same way that I do for VIP EAP members each and every Monday. So let's go ahead and take a look at one more clip, and then we'll move on to that. Next up, our final pair is on the New Zealand yen. Here on this pair, we had a nice uptrend, right? We had a market that was breaking into new highs, breaking into new highs, breaking into new highs. And then what happened? And then we found the new lows. Now that we found the new lows, this is a possible reversal setup. So after seeing an impulsive move that brings us into new lows, what I like to look for is looking left. Do I have an area that's been tested multiple times as support and resistance? If that answers yes, then we all know what that's called, right? That's our OTZ, or optimal trading zone. And with that being the case, what we can do, or what I do, is I wait for the market to get back up to this area that's between 78.46 and 77.96, and I'll be waiting for the aggressive entry on the 4-hour chart. Or so there was a clip from the best setups of the week video on the New Zealand yen, and we're exactly where we were at that clip on the New Zealand yen chart. Now, as you just heard, the reason for this was we had a nice break of structure. Then we looked left. This was the most recent level that was broken. Was it tested multiple times? Do we have frequency? Yes. Do we have recency? Yes. So this qualifies as an OTZ, or optimal trading zone, and it's where I look for possible trading opportunities. If I hit play, you'll see that this market got into that area and then pushed down from it. And now hopefully you have a good idea of how I spot these OTZs. What I want to do here towards the end of the video though is go through markets and share with you the optimal trading zones that I'm paying attention to for the week ahead. So what we're going to do is dive into some charts. We're going to go through them and I'm going to spot out OTZs live with you. So if that sounds good, go ahead and click that like button because you've been here for a while. Go ahead and click subscribe if you're new, and I'll see you in just a second. So if I'm starting off here on the euro dollar, what do you see? If we're breaking this chart down using optimal trading zones, what's the first thing you notice? We know where price is. If we're in a downtrend, then we know we're not looking at this low because it's likely to be broken considering we're making lower lows and lower highs. Excuse me, I did that backwards. Lower highs, lower lows, lower highs. We're likely to continue that trend until something happens or until something gets in the way. What's something that could get in the way? If we look left, we have a major level of support here. So that's my thought process, and what I do at that point is I kind of make a zone out of the support level. I don't have set in stone rules for the zone. That's something that would just come with experience and doing this yourself, but that's somewhere like what I would make a zone out of with this level. Then I scroll the chart back. Having that zone in place, are there multiple times that price has used this level as support or resistance? Well, yeah, we have support here, support here, support here, support here, support here. At this point, I'll redo my zone a little bit just to make it touch as many things as possible. It's actually pretty good where it is now. So with this being the case, I have what I call a counter trend OTZ or a counter trend optimal trading zone. It's that easy, guys. We now have a level and we can be patient. We're prepared now for what we're going to do if the market heads lower. One of the things that you need to be doing as a trader is preparing for what you're going to do if the market goes down and what you're going to do if the market goes up. You don't want to just jump into a trade right now. There's no reason to. When there is a reason to, that perfect pitch for a baseball player is when, I'm going to stop using that analogy, I've used it way too much in this video, is when though the price gets down to an OTZ. That's your perfect timing to enter a trade. So once it gets there though, you don't just enter a trade, and obviously you have to go back and back test all of this yourself to create a full trading plan around it. But for me personally, through my back tested data, what I do is wait for markets to get into these OTZs and give me a reason to buy. Sometimes those reasons can be as simple as a candlestick pattern. Sometimes it depends on the scenario, but it can be a price pattern like a double bottom. It just depends. But at this point, at least we're prepared enough knowing that we have a level we're paying attention to for possible trades. The next step, what did we just talk about? If you're preparing for what you're going to do if the market's going to go up or down, we've already prepared for what we're doing if it goes down. What are we doing if it goes up? Well, if we push higher, what's the next level of structure this market will hit if it goes higher? We have resistance right here, correct? So what's the next step? Drop a horizontal line somewhere in that resistance area, make an area out of it. Ask yourself, has it been tested multiple times? Yes, it has. If I bring this line up a hair, then we can see that this area right here has been tested as support, resistance, support multiple times. So this area between 1.1984 and 1.1941 is an area I would be looking at for possible short trades if the market got to it, right? And all of this is being done on a daily chart because I'm a swing trader. I trade mostly on the 4-hour and 1-hour chart. It can be done on any time frame. You can do this analysis on a 4-hour chart and then trade the 1-hour and the 15-minute. You can do this analysis on a 1-hour chart. Did I say 1 hour? I meant 4-hour, whatever. You can do this analysis on a 1-hour chart and then drop down to the 15-minute and the 5-minute to place your trades. It's irrelevant what time frame you use. This is just the preparation you need to do before you start trying to place a trade. So at this point, we are fully prepared on the euro dollar with the OTZ system for what we're going to do and how we're going to handle trading this pair. Next up, let's take a look at the pound dollar. Here, I accidentally already put the OTZs in, which this, oh, by the way, is no longer an OTZ. It's already been hit by price and pushed up by price. So with that being the case, it is discounted. I'm not looking for another trade in this area. I only take one trade per time a market gets to an optimal trading zone. But we can prepare ourselves by asking, what if the market heads higher? Well, just like with the euro dollar, we have a level of resistance looking left right here. We place a horizontal line there and ask ourselves, Did that level get tested multiple times? It indeed did get tested multiple times, therefore qualifies as an OTZ, optimal trading zone, and is an area I can look for possible short trades if the market gets there by looking for selling pressure on lower time frames with a number of different entry reasons that I have no way to get into because this video is probably already going to be over a half an hour long. But that is going to be my zone for looking for short trades going into next week here on the pound dollar. And even though this area of support is discounted, I can still ask myself, what am I? Be prepared, right? Guys, remember, preparation is key. Trading's not about what you do when you first initially look at a chart. Trading's about what you did before the market ever got there. Before the market ever got to the prices that it's at today, you need to already have had a plan in place of what you were going to do. So with that being the case, we can look below here. Let's say price does something like this and pushes lower. What are we going to do? Well, what's the next level of support you see? And I know this is confusing, guys, but I can see a couple of levels here. If I put a horizontal line right here, you can see that this was a level of support. And then if we look back a little ways, we can see that this level of support was tested multiple times. We have resistance, resistance, support, support, support. This is definitely a level that meets our recency and frequency. What I mean by recency is if we break below this zone, the next level of major support we will hit is right here. So that is recent for me. And frequency, we definitely have this level being touched and used as support and resistance multiple times by price in the past. So if this market, if the pound dollar pushes down throughout next week in a dramatic way, and these levels stay the same, whether it's next week or the next, then I'll be looking between 1.3514 and 1.3444 for possible long trades. Say 1.3444 and then having to say 4 afterwards. You got me. All right, next up, the Aussie dollar. On the Aussie dollar, we're no longer using this as a level of resistance where price is now. If we push up, again, we're not going to use this as a level of resistance anymore. So this is a scenario where you don't have a level of resistance until price pushes above it. Then you're looking up here for possible resistance. But until that happens, I don't have a level of resistance on the Aussie dollar. What's my next step? Prepare if it goes up, prepare if it goes down. If we head lower, and actually it looks like we're probably in the zone right now. If the Aussie dollar pushes lower, let's look left. What do we have? We have a major level of resistance. Does that line up with a level of support? Yes, it does. It might be a small level of support, but the fact that we have this much of a major resistance level there tells me that it's an area I want to pay attention to. So with that being the case, I'll start at my support level, which by the way is right here. And then I will also have that area down to about right there. So now, is this the next level that will be hit by price if we continue lower? Yes, it is. We have a support level, resistance level. I'm actually going to adjust these zones a bit to include this and this while still touching that support level. Go a little bit lower than price is now. That's now my new zone. It is recent. It's the next level of support. Price will hit if it goes lower. It also has frequency multiple times tested. With those factors coming together, 0.7388 and 0.7339 is where I'll be looking for possible long trades out of the Aussie dollar if we get into that zone going into next week. Next up, we have the dollar yen. Here on the dollar yen, we've already talked about the upside, which was right here. This was our resistance level we hit and ended up having that winning trade from. So we don't want to look there for possible short trades. The next level we could look for possible short trades is here. If it ended up being support or resistance in the past, we also need frequency, remember. So we do have recency here, but we'd have to look left to see if there's frequency. As far away as we are, that's not something I would mark up on a chart because it's going to take a long time for the dollar yen to get back up here. I would expect it not to do that within next week. So if I'm already prepared for what's going to happen, if this market heads higher, which is I'm going to do nothing unless we get up to this level, then I'll look left. What's my next step? Prepare for what you're going to do if it goes lower. If it goes lower, what are the levels that stand out to you? So right now where price is, if it pushes lower, the level standing out to me, there are two of them. The first one is right here, and the second one is right here. So what I do, take my horizontal line, we have recency. This will be the next level of support. This market will hit if it continues lower. If you're asking why this wasn't the next level, price got way too close right here and pushed up. With that being the case, I'm already counting that level as being used as support by the dollar yen. So the next level we'll hit is between 108.77 and 108.33. That level is the next level we'll hit of support, and also, which gives it recency, and also has been tested multiple times as support, which gives it frequency. With those two factors coming together, this is my optimal trading zone at 108.77, between that and 108.33. The final pair we're going to take a look at is the dollar Swiss, and for good reason. There are going to be times that you don't have optimal trading zones anywhere around. This is one of those times. At this point, I can't use this as resistance. Why is that? Well, this market seems to be in an uptrend, right? Higher high, higher low, higher high, equal low. At this point, we haven't broken and closed below this level, so we're not in a downtrend. We're not in a bearish rotation of any kind. So at this point, if we push higher, I'm expecting these highs to break. So if we go higher, this would be my next level of structure resistance I could look at. If we go lower, this would be the next level of structure support I could look at. Considering I don't think either of those things are going to happen within the next week or two, I have no trades on the dollar Swiss. This is when you just don't trade that currency pair. So that's the dollar Swiss. That's what I'm looking at on the top 5 major pairs moving forward the rest of this week, which is already Thursday, and next week. I know this was an extremely long video. If you made it till the end, be sure to comment. I swear, I try to make these videos short. With this video, for example, I told myself before I started it, I was like, all right, 12-minute video tops. It's probably 35 minutes long, I would imagine, at this point, but I can't help it. I feel like I just need to go into these small details for anyone who doesn't understand. Although it may be a bit repetitive for those of you who have been watching the channel for a while, there are new viewers here that need to hear all of that. Don't forget, we have a brand new, completely free beginner course that will take you step by step through everything you need to know if you are a beginner to get your trading journey started. That's linked in the description, and you can go to TTCForexCourse.com. I just made the domain name, so I do not remember it. www.TTCForexCourse.com. It'll be on the screen somewhere. Also, if you're interested in the EAP Training Program and being personally mentored by me, that link is in the description as well, or www.EAPTrainingProgram.com. If not, that's totally fine too. Make sure you keep it locked here, though, by subscribing, clicking that like button before you go, and I'll catch you in the next video. See you soon.